We're recording this particular class, so I would ask you to turn off your cell phones, make sure that you're not talking in the background that will be picked up on the video, and hopefully enjoy the class. Ready?
That goes for me too. I guess I gotta turn mine off as well.
Hi, I'm Sandy Levin. I'm the Executive Director here at LA Law Library, so welcome. I wanted to tell you just briefly about this law library. You may not know how lucky you are to be here in Los Angeles County, where we have the largest publicly accessible collection of legal materials other than the Law Library of Congress anywhere in the country. So we're pretty fortunate to have this. It's open 6 days and 1 evening each week, and we are always accessible to the public. So we invite you to enjoy the class today, but also to come back and check out our classes year-round. You can find the schedule on our website at www.lalawlibrary.org. So please take a look at what we have to offer, come in and use the resources, come back for other classes and workshops, and know that you have a place to get your legal questions answered right here at LA Law Library. Thanks, and it's my pleasure to introduce you today to Mark Santana, a terrific attorney and presenter with expertise in this area, and he will be talking to you about insurance and natural disasters, how you can protect yourself. Thanks.
Thank you, Sandy. This is the first time I've done a webinar, so it's going to be kind of interesting. I like to move around, ask people questions, sometimes in their face. But now I'm confined to a little area, so please bear with me. When you came in, even people that are employed by the library, you were given tickets, right? No, you weren't? Okay, you should have been given some tickets. So keep one of them and put the other one in the hat. And then we'll have a drawing at the end, all right? So, it's so nice to have my last name followed by the word natural disaster. You know, when I was asked to teach the class, I had revealed that I had been a claim adjuster many, many years ago. And as a result of being a claim adjuster for an insurance company, I decided to go to law school. I was dealing with attorneys. How difficult can it be, right? Okay, let's go on to the basics. Basics. Okay. All of us have been at cocktail parties or birthday parties where perhaps you run into an individual that may be a doctor or a chiropractor or an engineer or a construction person. Okay, and we've asked them questions. Oh, I got a pain in my lower back. What do you think it could be? When you ask an attorney a question like that, attorneys have ethical duties, and sometimes those ethical duties attach and they build a relationship. So, that being said, attorneys for the most part try not to answer questions. We're not rude, but in that social setting it can be very difficult ethically. So while I am discussing issues of insurance and how they relate to coverages and natural disasters, I'm not giving you any individual advice, and so that the attorney-client privilege and the attorney-client relationship does not attach. In addition, since I'm not a designated expert in the field, I always advise clients whenever they're speaking, whether it's me or someone else, they're at a speaking engagement and they're talking about a subject that's important and relevant to their individual lives, they should seek out someone that's an expert in the field, either an insurance agent in this case, or an attorney that does insurance coverages. Got it? Yes? Yes. Okay. Very important source of information for all of us in California, and that's the California Department of Insurance. They have an excellent website. It's insurance.ca.gov, and they have all these different areas that you can look into. For consumer information, it would be what you need to know. General information about insurance and what the Department of Insurance for California can provide to you as a consumer. Information for seniors. This I guess I'm qualified as a senior now because I've reached that age, although, you know, mentally I think I'm in my 30s, but when I look in the mirror I have to scream sometimes because of all the gray. But I am thankful for the gray. Lots of stuff is going on with the seniors today. You know, there's a lot of fraud going on, and it's perpetrated in many different areas, and one of the areas is insurance. So they have specific information on the website that's applicable to seniors. Agents and broker information. Here you'll be able to enter in to the website the specific license of either the broker or the agent to find out, are they really licensed? Where's their headquarters? Where's their office? Have they had any complaints? Which is very important. Just like when you want to choose a doctor or a lawyer, you should do your due diligence in finding out, are they really good? Right? Because you'll be paying money for something that's of value. So you want to make sure that you're making the right investigation that your investment will pay for. All right, insurance company and insurers. Insurance companies, another word for them is insurers. Okay, so it's either or. Here you'll be able to find whether or not your carrier is actually admitted in the state of California to provide insurance. Sometimes, for example, in the case of natural disasters, there may be carriers or insurers who are not admitted in California but still write insurance because there's no one else that does so, or because the coverages are severely limited. So you'll be able to find out all about your specific insurance company on the website. All right, filing a complaint. If you have an issue with an agent that you're not able to resolve, or an issue with your insurance company, the Department of Insurance has a complaint form. And there's an entire process on how they handle that. And on the website you'll be able to learn that. Okay, I kind of mentioned a little bit about fraud. Fraud is rampant. It's always rampant. And it's getting bigger and bigger with the use of technology. So here you'll be able to find out what are some of the schemes that are going on and what can you do if you're actually a subject of an insurance fraud scenario. All right, general information about helpful news that's regularly updated. All those things you want to know about insurance. Okay, it can be kind of fun. And a lot of people look at it as a boring subject, but it can be fun. There is a hotline, and appropriately so, the last 4 digits are help. So I don't know, did many of you print out or do you have access to the online PowerPoint? It's listed on the library website, so you'll be able to go on and get that information. All right, so what are the objectives to our little meeting here? I want to provide you some basic information about the insurance terms, the claim process, natural disasters, and how all of that together affects you. And the goal is to get you thinking. I mean, most of these classes are to get your mind thinking kind of outside of what you would normally do. And also, as you get information, you'll be asking yourself other questions. All right? And always, 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 the best time to ask questions is before anything happens, not after. Okay, or during. All right, moving forward. So, how many here have had an insurance claim? 2? 3? Who else? Don't be shy. Okay, 4. How many here have insurance? Everyone has an Alfred? Okay, so everyone here has insurance. All right. Did you know, for example, there are many different types of insurance for cars, for homes, for condos, as a renter, and all policies are different. So what do you consider, or what should you consider before buying or renewing your insurance? Anybody? Yes, ma'am.
What's included, what's covered, what's not covered?
Exactly. What's included, what's covered, and what's not covered. And where would you get that information normally?
From the agent?
From the agent, that's correct. But sometimes, because we have the internet, because businesses are all online, we can buy insurance over the internet. And so we have to do our due diligence in order to find out, what is actually covered. But nothing takes the place of actually meeting with a professional, asking questions, and figuring out what's the best policy for you. Okay, so what is a policy? Young lady in the blue, what's an insurance policy?
An insurance policy is basically a contract of what you have coverage on, whatever it is that you have coverage on.
Okay, And that contract is sealed by the payment that you make to the insurance company. For paying them, they're obligated to cover you by the terms of the contract. Okay, now, there are different types of insurance policies. There is an all-type claim policy for homeowners specifically. There's also a named peril policy. So, how many believe that the insurance company's duty is to make you whole? Whole. Yes.
I believe they're supposed to make you whole.
They're supposed to make you whole. Okay. What about your time invested? Do they cover that? No. Okay. What about your deductible? Do they cover that? No. Okay. And sometimes it's more than a deductible. So you always have to ask. The idea is that the insurances, they reduce the risk of damages to people, but they never really make you whole because, you know, once you suffer some type of claim, there's always damage that you're never going to be able to repair. And people have to know that. All right. Claim procedures and payments. Ah, this is great. Okay, so when I got out of college, I didn't know what I wanted to do. My dad said, well, you know, become a lawyer. It's like, oh, there's no way. I don't want horns on my head. No. So I got a job with an insurance company through a headhunter. And it was really interesting because I was a claim adjuster. And I don't know if any of you remember, but in one of the I Love Lucy episodes, Lucy was trying to get a job. She ended up in the chocolate factory, but one of the jobs that the career developer was talking to her about was claim adjusting, and I had to laugh, you know, because every time I think of that, I remember I Love Lucy. Anyway, no chocolates involved. Essentially, you learn to deal with other people that are suffering some type of loss in their life. You look at their coverages, and you try to help them. Not all claim adjusters are the same. There can be different. Some work for an insurance company, and others may work for a third party, depending upon many factors. Okay. Resolving disagreements. Every insurance policy will have a provision that if you don't agree with your insurance company, there is a method by which you can resolve. And it's either within the company, if there's a property loss, there's a specific process for you to meet with the insurance company and resolve. It's kind of like mediation, but it's a little bit stronger. Okay, so we asked this question about who has insurance. But when was the last time anyone actually looked at their insurance policy? I mean, it's a great read. It's not on the bestseller list, but it's a great read. The pages are very, very thin. Does anybody remember that? Okay. We're not all illiterate, right? We have them someplace, right? We got them in the mail? Yes.
For me, looking at it and understanding it are different things. So I look at it, but it doesn't mean I understand.
Okay. All right. When you read a book, do you understand everything you read?
Well, not necessarily, depending which book.
Okay. Most insurance policies have a definitions page, so that if you're going through and you don't understand something, and it's usually in bold, you go to the back, or usually at the front. They're usually at the front, and it'll tell you, what's an insured, who's the insurer, what's arbitration, what's a deductible, and they'll list all these things, and it makes reading a lot more easier. Okay, so when you can't sleep, try to get your insurance policy out. It's a dead ringer for a sleeping pill. All right, so when you looked at your insurance policy, if you recall, did it have everything in it that you thought it had when you spoke to your insurance agent? When you first got it or when you renewed? Anybody? Landa?
Yeah, it covered everything. My concern sitting here is understanding now that it maybe has not been updated for 10 years. So other than the price going up every year, I can't say the coverage has changed or improved, whereas what it's insuring may actually have changed.
And that's a great point. Life goes on. Everything changes in our life on a daily basis. If we don't take the time to actually look, we may be harming ourselves in the long run. Okay. So, how many of you keep your important papers in a file cabinet at home? Janine? No? Under your bed? No, okay. Most of us do, right? All right. So, is this what you normally do? Out of sight, out of mind? You put it in there, but you never look at it until either you need to renew it, you get a bill or an invoice. When do you pull it out? You don't, do you? Do you? Has anyone pulled out their insurance policy? Ever? Other than...
It's still in the envelope.
Still in the envelope.
I tore out the card.
Okay, and you put the card in your glove box, right?
In my wallet.
Okay, well, we need to have it for cars, we need the insurance. All right, so this you got to get out of. You should at least, after this class, go home, open the file cabinet, pull it out, fill that really nice, thin paper, and take a look at it. And look at what your coverages are, especially if you have renters, or if you have condo, or if you have homeowners. Look at what your coverages are, because, property in California appreciates. And if we only have a certain amount of coverage on our dwelling, and we know that it's going to cost more, then we have to increase our policy limits. So it's a good time to look at it. And there's a caveat. If there's a natural disaster, you know that the supply and demand is going to be unequal. The demand is going to be very high, and the supply of contractors is going to be very low. So the fees are going to go up. All right? Oh, I love this chart right here. This has all the buzzwords of insurance. Okay, loss, insured, risk. An insurance policy is protecting you against certain risks. These are all things that you'll find all these words in your policies. You'll also find this. This is what insurance people call a declarations. It's super exciting. Okay, right? Come on, you guys, play with me. All right, so the number one on a declaration page will always have who you are as the insured. You're the name insured or the insured. It'll have your name and your address. It'll also have a policy period, and it'll tell you when your policy starts. So if you have a loss between your policy period, that means that there's coverage. But you need to keep asking, well, is the covered event excluded or covered? Okay, so that's like the first step. The second number represents the actual insurance company. Okay, most of us know of, Allstate, State Farm, but did you know they all have subsidiaries that aren't State Farm, that aren't Farmers or Allstate? And sometimes those subsidiaries write a limited policy for a specific group of risks. I had a client recently who wanted to insure a rental property in East Los Angeles, and no one would insure it because it was old and there were a lot of issues with the electricity and so on. So backing up like a week before that, when she told me she had no insurance, I ran her to AAA. I said, they will insure you. We'll find a way, because you have to have insurance. If something happens and your house burns down, you'll be liable, and you won't be able to recoup any of your losses. So when we sat down at the office at AAA, the agent met with us and went over a bunch of different options, of which they could not write, but they had a subsidiary downtown that writes high-risk business. There is always someone that writes insurance. Always. It might be through a subsidiary, it might be through another company, but you can always find someone. Okay. In that same number area, you'll have the effective date as well as what premium you're going to be paying. All right. Number 5, if there's a mortgage or if there's a lender on your house, they will always be listed as the mortgagee, because you are obligated under your loan to make sure that you have insurance on your house. And caveat, if you don't put insurance on your house, the lender will place that for you. And the premium here is $479. Lender-placed insurance will be about 3 or 4 times that value. And I know this personally because when I got out of law school, I worked for Cigna, and I worked in a specific area that was lender-placed, or what we used to call force-placed policies. And lenders do it because they want to make sure that the loans, the money that they've, put out on a loan is recuperated if there's damage on the house. Okay? Go on. Okay, forms. Every policy will have forms on it. Even your automobile policy will have a designation for forms. Also endorsements. Say you have an heirloom that was given to you by your grandmother and it's worth, a couple $1,000s. Most of the coverages have a certain limit. So you have to read your policy in order to find out if the limit applies to grandmother's jewelry. Say it's worth $5,000, it might be only worth $2,500 to the insurance company, and that's all you're going to get, minus your deductible, if it's ever stolen or destroyed. So that's why it's very important to figure out, what you have and what you don't have, and make the decision whether or not you want to increase your coverage. Okay? That's what you'll do when you go home tonight, right, Melinda? You'll look and see. All right. So number 10, 9 and 10 are about the same, all with forms and endorsements. 11 are state-specific endorsements. Question: what 3 states have the most natural disasters? Florida. Mark? You're stretching?
She took an answer. I was going to say
Florida. Who else? Yes, ma'am.
California.
California. And one more. It's a big state, and they wear boots and hats. And I lived there for 8 years. Never liked it a day in my life. Okay. There's nothing like California. Nothing. Texas. So Florida, California, and Texas are the states that have the most natural disasters. All right. So on the declarations page, number 11 has Florida. And it says sinkhole, which is a natural disaster. And I'm sure you all seen them. It's like, where the heck do these things come from? And there's probably another one on here. Yes, if you drop below, you'll see Florida Hurricane Catastrophe Fund. So there's always, usually, if there's a mortgage company involved on the house, there'll be coverages for hurricanes. Now, I told you when I got out of law school, I got a job with Cigna and that lender placed. Okay, I got out of school in June, took the bar in August. At the end of August, I had a job with Cigna. Do you know what happened? Well, let's see. Do you know what happened in 1992 in Florida? I'll give you one guess.
There was a hurricane.
Hurricane! It was Hurricane Andrew. It was a big papa. It was huge. It's one of the top 5 in natural disasters in the United States. Okay, so we had this influx. We were doing the lender-placed policies, and the whole state, the whole lower part of the state was affected. And there were floods, there was everything. Lots of destruction. So in my unit, we were 6 supervisors. Everyone took a rotation, and we went to Florida, and we helped writing checks. That's all we did. We wrote checks, we worked with the adjusters, and it was big stuff. We couldn't get to everyone, so we had to hire other people. We're talking about hundreds of thousands of people that were suffering losses. So when you think about whether or not you're paying too much for something, always think about if you don't pay, the risk is very high. All right. In case you're not aware, homeowner's policy on your declarations page will also have personal liability. So if someone comes onto your premises and they have an accident and you're at fault, then there's coverage if someone sues you. And there's also coverage if they injure themselves and they incur medical bills that will be paid out of your insurance policy. All right. So what types of homeowners policies are there? There are many different types. Not all of them are the same. In insurance, in the industry, there are standard forms for practically everything. The thing that makes them different is, what the product is and what endorsements there are on the policy. For example, on condominium owners' units, they don't cover the actual building. They cover what's inside the building. Okay? Renters, Normally covers tangible personal property. Homeowners forms, there are many. The HO3 is the most popular one. It's been around for decades. It covers almost all risks except for the ones that are specifically excluded. Okay? Go on. Now, disasters. Okay. Can someone name a few natural disasters? And we're not talking about me up here. All right. So, Mark, name a natural disaster. Hint. Hurricane. Next.
Earthquake.
Earthquake. Come on, we're in California. We're in LA. Who else? What's that thing going around? Well, there's actually two of them. Tornado. All right. Not bad. Not bad. All right. Earthquakes. We all know. Tsunamis. It's possible we can have one. We haven't had one yet, but it's possible with all the earthquakes that are going around in the Pacific. Blizzards. Did any of you ever think about a blizzard being a natural disaster? Yeah. And I hate when I'm in an elevator. This week, so many people have complained about the weather here. It's like, when I grew up, this was normal at this point in time. We don't have to have 80s all the time. But you'd think they're living in the blizzard. They're in, a muffler and a jacket. It's like, this is California. All right. Hailstorms. We don't get them as much here. In Texas, when I lived in Texas, there were hailstorms all over. They got a lot of rain, a lot of windstorms. Tornadoes, wildfires. Anything else?
Mudslides.
Mudslides. Oh my, that is really good. We had one recently, didn't we? Okay. And why did we have them?
The rain.
The rain. And fires. When they go together, it's like TNT. All right. So these are the states, 8 states with the most natural disasters. We named 3. Oklahoma, there's that corridor, but they always get tornadoes and floods. New York, Hurricane Sandy. Hi, Sandy. She's not a hurricane, but very bad. You never know where they're going to hit. We had the nor'easters recently. There were 4 on the East Coast. Louisiana, what was that hurricane called? Katrina. 80% of the city was flooded. All right? Alabama, hurricanes. Kentucky, landslides, tornadoes. All right, so the costliest or the most expensive natural disasters in the United States have been Katrina in 2005. The National Oceanic and Atmospheric Administration estimated it was $160 billion. So a lot of it was covered by insurance. Some of it was covered by FEMA. But if you had a choice whether to take FEMA or your own insurance, you would take your own insurance because FEMA doesn't cover a lot of things. All right. Number 2, Hurricane Harvey. Let me see. 27 trillion gallons of rain fell on Texas and Louisiana in less than 2 weeks. That was last year. How many remember seeing on TV all those floods and people walking through, imagining all that petroleum and snakes and all these other things that are going through water? Hurricane Sandy was number 3. That was estimated at $70 billion. Hurricane Andrew, that was $47 billion. Okay. There was another really big one, and I'm not talking about, well, another big one. There's 2 more. Where's LA? We're number 5, okay? Earthquake, Northridge, $45.2 billion. It's phenomenal. And there's one more that we haven't discussed and people don't really think about. It's called the drought. Back in 1998 or 1988, the Midwest had a severe drought. Cost $42.4 billion. So these are things that can be insured against if we're willing to pay the price. Okay, so what is covered? You need to look at your insurance in the declarations page to figure out a couple of things. What type of damage it is and what's it classified as. All right? And the moment to do that is now and not later. So for natural disasters, you got to ask yourself, Is it something that a normal policy is going to pay for? No. Disaster is like something that's not thought of. It's not anticipated. So natural disasters normally are not covered. And they're most certainly not covered in the 8 states that I brought up before. So you need a special policy or you need an endorsement to cover against natural disasters. Most of us have heard of the California Earthquake Authority. I recently bought insurance for my residence, and I went through them because I have a house in the mountains. A lot of people don't write insurance in the mountains, so you have to go through other carriers, and sometimes those carriers or subsidiaries of major carriers don't write insurance. So the California Earthquake Insurance Authority writes everybody. All right? It's going to cost a lot of money, and the deductible is normally very, very high. I think my deductible is 10%, and that's $100,000. Yeah. But think about it. Okay, so it destroys your house. All right? You're going to have to live someplace in the meantime that they rebuild your house, right? And if there's a natural disaster, that means a lot of people are going to be without housing, right? What happens when there's no supply in the market? The prices go high and higher and higher. They skyrocket. So if you want to rent a place near where you live, the rent is going to be high. So you're going to have to pay it anyway because you have to live. So that will come off of your policy. All right? I made a mistake here. It's actually 1994. And I know this because my spouse started work at Countrywide on that date. And on that date we had the earthquake. So we were both getting up and we weren't getting ready to rumble, but it started rumbling. Okay. Most of us remember this last picture, that apartment complex where people died and the 3rd floor became the 2nd floor. Do any of you remember that? Or are you too young? Mark he was still in high school. Okay. You were in high school, right? Yeah. Okay.
4 years old. 6. It was 1994.
6. Okay. See, we talk about age. It's very humbling. A lot of the highways were down. I remember when I was in law school, we had the San Francisco earthquake, and the bridge, part of the Bay Bridge, actually collapsed. That was scary. And the only lights in town were the U.S. Mint, where the money is. That was the only thing for like 2 full days. So it's a pretty scary experience. All right. Another very common occurrence is floods. We talked about this a little bit. Most lenders, when they will write, when you buy your home, they will figure out whether or not you're in a natural floodplain. And they do this because they want to make sure that, again, their interest is covered and that you are covered as well if you don't purchase it. But it's a separate policy. And there is a program, it's the National Flood Insurance Program, that provides people with this type of coverage to mitigate or lower the risk of damage to them. Okay, flood zones. When my spouse and I bought our house in Sherman Oaks, after the earthquake, because we were in an apartment and it was red tagged, fun stuff. After that, we bought a house and there was earthquake damage, so we fixed all of it. It was really nice. And then we had a couple of real strong rainstorms a couple years after, and our house happened to be on a lower part of the town. So our entire backyard and garage flooded. We had no clue. Thankfully, it was in a zone, and the insurance company paid for the damage. But it's worth your while to always check and see whether or not these type of risks are involved in wherever your property is located. Okay. Someone talked about floods. We do have floods. The top left photo is San Jose. I had no clue. I have friends that live in San Jose that practice law. I didn't know that San Jose was in a flood. Part of it was in a flood zone. It was horrific damage. Of course, we know what happened recently in Montecito. I mean, it's pretty sad. A lot of people died. But they do happen in California. We just don't get fires and earthquakes and riots. That was one of the other seasons. Okay, so what do you do when something happens? Well, most importantly, you take care of yourself and your loved ones. That's a no-brainer, right? Take care of our family. But we try to develop a plan before it actually happens. So how do we do this? Well, there are different agencies out there, such as FEMA, that can provide you with a plan on what to do. But some of it's very logical. You need to figure out, A, if you have the proper insurance. If you have it, you pull out your insurance, take a look at it. But also be prepared personally for what might happen. Water, food, all these things are logical, but sometimes when we get in those type of situations, the logic goes out the window. Get photos and make an inventory beforehand. I know that when we had the earthquake in 1994, after things had settled, there were a lot of promotions and a lot of information in the public to try to prepare people for the next one. And some of those things were put out by the city, by the county, and also by insurance companies. And those are, make sure you have your papers all in one place. Very logical things. Make sure you have the right coverages. Make sure your house, if it's not retrofitted, if it's an older house, get it retrofitted. All these things help mitigate or prevent the worst type of damage you can have. All right. So let's say you suffer an event, earthquake, and you have the coverage. What do? You call your insurance agent and you make a claim. Okay, so inevitably you'll call the agent and the agent will call the claims department, or you might be able to call the claims department directly. That is on your declarations page, the phone number of the claims department. They'll call you, usually within 8 hours. It might be longer if there's a natural disaster because you can only call so many people, and insurance is very wide. Also during natural disasters, insurance companies have a tendency of hiring third parties, public adjusters or adjusters, independent adjusters, to call people because it's very important that the company figure out who has actually suffered a loss and try to get the scope of the loss over the phone, as well as the ability to communicate with them on an ongoing basis when an adjuster will actually be assigned to meet with them or to handle the physical damage that's been occurred. All right. So take photos. If you have time, you can, and you probably won't in a natural disaster, but try to get a scope of what's, what the damage is. You don't need to be a contractor to do it. You could say, well, the wall, on the right side of my door is missing, I have no windows, and, etc. So that the insurance company has an idea, because they're going to have to prioritize sooner or later if there's a natural disaster, and they're going to have so many different types of claims. Some might be fire, some might be water damage, some might just be, the damage that naturally comes through an earthquake. All right. So when you're dealing with the claim adjuster, it's very important because, they're operating under the fact that they know who you are, they know what your insurance covers, but they don't know anything else. So it's really important that you be thorough with them. And just as important as being thorough is obviously be there when they're going to inspect, because this is what they do for a living. And even though they know what they're doing, sometimes they might miss something. So it's super important that you're present for every single inspection. Now, I come from the company standpoint. I would never force anyone to a settlement. But you may be dealing with third-party adjusters in a natural disaster, and they might want you to, sign on the dotted line. I always tell people, my clients, individuals that I meet in different clinics here, if you don't know something, if you're not sure of something, think of the rule of 3. All right? Always the rule of 3. If you don't know, you ask one person, then you ask another person, and then you ask a third person. Someone in that 3 will know something. And if they don't, they may give you some important advice, some little tidbit of information that will lead you to something else. Never make a decision on your gut, because some of us have big guts, some of us have small guts, but it doesn't always work that way. You got to make an intelligent decision. Okay, so in addition to being present for the inspections, make sure you understand what rights you have under your policy. Now, you can read them, you can talk to your agent, you can also call an attorney, you can also call the Department of Insurance. They'll be able to help you and walk you through it. Document everything. That goes without saying. Someone comes, you document who the adjuster is, their contact information. You always want to document because someone might forget. They might forget. Their paper might get lost. Keep a copy of all your documents that the adjuster gives you. And you have to stay on top of your insurance company because they're dealing with thousands of claims. And most importantly, you have to be honest. Because if you misrepresent the facts to your insurance company, or you intentionally misrepresent the facts to your insurance company, they can cut your coverage. And that's not a nice thing. But when you misrepresent the facts, it's almost tantamount to committing fraud. And if you do it intentionally, you can go to jail. Very, very important. Okay, California. We love our laws in California. California has more laws to protect the consumer with respect to insurance than any other state in the country. All right? They tell the insurers what they can do, when they can do it, and how they do it. This is very, very important. When I was a claim adjuster, we had the Fair Claims Settlement Practices Regulations. It's a huge book. And as an adjuster, I had to adhere to all the rules in there, which means I had to contact people within a certain time frame, and it was by hours, not by days, at that time in the 90s. Also, I had to make sure that certain forms were sent out on a due date deadline, and I had to make sure that the insured knew that they had to send it back to us by a certain deadline. We call a form that deals with the major loss of proof of loss form. That it had to go out within a specific time, it had to come back within a specific time. Sometimes people don't know them, sometimes people do know them. That's why it's very important to make sure that you communicate with the insurance company's representatives. You ask questions. If you don't ask questions, get a number and follow up and document. Okay, so these are the duties that your insurers have. To investigate your claim, to process your claim, to pay your claim fully and promptly and in good faith, and to deal with you fairly at all times. Yes?
What do the adjuster does? What is that they do?
Okay, what does an adjuster do? Okay, so you came in a little late. I explained to the class that I used to be an adjuster way back when, before I became an attorney. The adjuster is the representative for the claims department of the insurance company. So when you have a loss, you report the loss to the insurance company. Then the insurance company assigns an adjuster to contact you to figure out what your losses are and whether or not your loss is actually covered, and then they will pay your claim.
Is someone who works for the insurance company in contact with the client then
Yes.
and see if it's covered or not covered
Yes.
by the insurance?
And sometimes they're directly employed by the company, and sometimes they're contracted. Now, in a scenario where we're dealing with natural disasters, it's quite possible that they will be contracted simply because of the huge numbers of claims. Okay?
Thank you.
You're welcome. Okay, now here are your duties. You guys are the insureds. You have to disclose material information. So what's material?
Possession. Like your possession.
Well, material would be really important information. So if they ask you, like, well, who's your lender? You need to disclose that. You know, and was this here before the actual loss? Those things. You have to disclose honestly. You have to avoid concealment and any type of misrepresentation, again, because that can trigger, you know, a nullification of your policy or a cancellation of your policy. Report your loss or damages to the authorities. Provide notice of claim to the insurer. Prepare an inventory, which is super important. All of us have seen commercials on TV where before a loss happens, you know, there are people, you know, with a, well, in those days they were camcorders, but you can do them with your phones now. And you need to do shots of your house and all your personal property. Because most of us don't know what we have, do we? We buy, we forget, we put in the china cabinet. Or, you know, what about clothes? Clothes get damaged in a natural disaster. How are you going to remember how many clothes you have? Or your shoes, right? Important to document. Okay, so you'll have to present an inventory to the insurance company of what your damages are.
Do they ask you also for receipts, so I don't know, computers or TVs? Or
Yeah, they will ask you, and you,
receipts?
yes, And you can supply, I mean, there are a couple things. If you don't have an item, then they might ask you for the receipt. But if you have the item and it's damaged,
Then it's the proof there.
yeah, the proof is in the closet or wherever. Okay. It's damaged, but it's still there, yes.
Do you recommend taking an overwhelming task like that and saying, those with the most monetary value, keep those receipts, but for 10 years, you're not going to keep every single receipt that you have?
It's just
Be
like,
selective?
I would be selective. You know, it's just like income tax records. How long are you supposed to keep them for?
7 years?
Yeah. But the issue is some of those things appreciate in value. So if you buy like Yadro and you pay, you know, a couple $100, well, if it goes into retirement, it's going to be worth more. But normally, if it's something that suffered a loss, you're going to have the remnants sitting there. Okay? And you can only guesstimate. Thankfully, we have the computer now, and we can look at values of different things. And there are also books and catalogs that can give us values. Okay? The proof of loss form that I talked about earlier, when your claim goes over a certain amount of dollars, there's a form that you fill out, and it's signed under penalty of perjury, and that goes back to the insurance company, and that's part of their file. Okay, and I talked a little bit about this. If you don't comply with the regulations and the rules, you can be found in breach of contract, and that is bad. It's like no coverage, and you want coverage. Okay, let's see. 30. I think I briefly talked about this as well. These are the regulations that the laws of California have been enacted to protect us as consumers and as insureds. These are the rules that the insurance company's got to comply with. Okay. These are essential elements of the Claims for Handling Act. What would happen? Notice I said what happened. I'm not a tech person. Yes.
I have a question, and I might be premature. You mentioned earlier that you would prefer to have your own policy versus FEMA. Will FEMA, can you describe that overlap? Is it that they will not intervene if you are?
Okay. On our loss in Sherman Oaks with the water, we got paid for some and we didn't get paid for another. FEMA took over where the insurance company didn't pay the entire loss, and so they paid us, but it was kind of like a loan. With insurance, there is no loan. You get the deductible applied, but with FEMA you have to pay at a very low interest rate, and you have to pay it back. Yes?
In a natural disaster where you have mortgage, who pays the mortgage?
You continue to pay. Some mortgage companies delay the process. It all depends on what's happening at that time.
Okay, but if it's a natural disaster and everybody's house is tore up.
Yeah, I'm sure there's going to be some type of, dispensation or some type of delay, because the issue is you have insurance and that's going to rebuild your insurance, or the insurance is going to rebuild your home.
So you continue paying your mortgage even if the bank is closed?
Oh yeah.
How?
Online. You don't have to go to the bank. We are an electronic society now. It's not like it was before where you couldn't actually walk to a place.
I know, but
and I'm not dating myself saying I lived in that era, but I'm just,
But if you have a natural disaster and communication is like, we have a major earthquake and the lines are down and you can't, internet is only for emergency use only, and FEMA comes in, you still are expected to pay your house?
You're still obligated to pay. You have to, but then again, you have to look at your contract, because you have a contract with a lender.
Yes.
And unless the lender comes out and specifically says something to amend that contract, for example, during this disaster we're going to do something with the payment process. And I don't remember what happened to us specifically during 1994. Does anyone remember, did anyone suffer damages and have a house at that point? Did you?
Yeah.
What happened on yours? Did they delay the payments or freeze the payments? No, they didn't.
No.
Yeah,
We
they
were
still,
and back then it was by mail, but we were still expected to mail in the mortgage payments one time.
yeah.
I
Yes.
think that sometimes, maybe, we can also call to the bank, and if something that is making it impossible to us, because we're in the hospital or whatever, and talk to them and ask for more time to pay, maybe 1 week or something. And usually the bank say yes, when it's a big thing happening like that. If we call them and say what's going on,
Yeah.
and they know that it's happening.
They're human too. Yeah.
Yes.
Okay. All right. Remember what I said about getting a second opinion? Before you settle your claim, make sure you're settling it right. Now, there's a caveat to that. There can always be a supplement. If there's something that's discovered later, you can call the insurance company back and say, this is now occurring. And they may reopen the claim and readjust the claim. But generally, when the claim is settled, it's settled, and you're going to sign a settlement agreement. Now, if you disagree with your insurance company, there are ways within the policy that you can resolve them with the company, and they're kind of like it's kind of like a mediation. I touched upon it earlier. There's a specific word for it. I just can't think of it right now, but it's under the property coverage. All right. Now, as Sandy said at the beginning of the class, the library is a phenomenal resource. If you want to get a copy of the Claims Fair Act guide, you can go to the reference desk and they can put you in the right direction. It makes for great reading, and you'll be able to figure out, you know, what your duties are and what the insurance company's duties are relative to any type of claim. Normal claim, natural disaster claim. But things will be always different during a natural disaster because of the sheer volumes of claim numbers. All right. There are other resources that are at your disposal as well. One of them is the LA County Bar Association Smart Law Program, where you can call or you can go online to the website and find an attorney that deals with insurance or insurance claims. And they also have a phone number that you can call. Do you have any questions?
This last right here in LA?
It's in LA on 7th Street, right above the 110. And I only know that because they're in my office building. So, okay, so who got tickets coming into the class? Okay. Did you all deposit them in here? I'm not asking for donations, just the tickets. Although, okay. Oh, you keep one of them.
Oh.
You keep one of them.
I know, we only took off one.
Yeah, I think the
Okay.
class participants only got one.
Oh, okay. Thank you.